Good afternoon, everyone, and welcome to Saxo's webinar, Women's Investing Stories. My name is Ida Johannesson. I'm head of commercial ESG at Saxo, and I will be the moderator. We're very happy that you could join us today, and I am excited to have this important conversation, especially because it's with a panel of women. The truth is less women invest compared to men. So there's quite a bit of work to do still on shrinking the investing gap. This webinar is part of Saxo's investing sessions, a series of webinars designed to help you get started and become better at investing. For more information about the series, you can visit our platform and website at home.saxo, and I'll add the link. I've added the link on the last slide. The slides are available. You can download them from this room. Today's webinar, we would cover the first 45 minutes. We'll have a conversation. I'll ask some questions to the speakers about their investing experiences. Then the last 15 minutes, it would be time for your questions. So if you have any, please feel free to type them in the questions tab. I believe it's on the right top of your screen. Then we have a short survey at the end, just a few questions. We would greatly appreciate if you could complete the survey, as your feedback really helps us improve and serve you better. One last thing, some important information about the webinar. This is for informational and educational purposes only. It is not a recommendation to buy or sell any products. Investing is risky, and before making any investment decision, you should consider your own personal situation, time horizon, and how much risk you're willing to take. So we are ready to get started, but first I'll ask the speakers to briefly introduce yourself, tell us who you are and what you do, starting in alphabetical order with Althea, then Camilla, Charlotte, and Charu last.
Thank you very much, Ida. So I'm Althea, I'm Italian, I have 2 kids, a Norwegian husband, and I'm living in Copenhagen. I went the furthest north I'm willing to go in terms of where living. And funny to know, I like cooking and traveling. I'm a head of fixed income strategy in Saxo Bank. So what do I do on the daily basis? That I analyze market trends, economic data, and support Saxo clients through their investment decisions. My role can have some advantages and disadvantages when you look at the world of investing, because it is, while it's true that I'm involved in markets every day, I'm very specialized to look at the fixed income market. So I have very little confidence with other asset classes. So I think that it's great to have conversations with other people here to understand what are their challenges, what are objectives, because in many ways, even though I'm involved in markets every day, there is so much I don't know, and it's hard to consider in investing decisions. I hope to be of help, and I'm welcoming any questions. Thank you.
Thank you, Althea. And then I guess I will go next, Ida. First of all, it's really good to have the opportunity to speak to people that are hopefully like-minded, at least over time, in order to be curious into investment. And just a bit of background for me personally. I am in the mid-40s, female executive, and I have 3 daughters, and happily married with Andreas through many, many years. We also have a dog, by the way. And I'm born and raised in a family of entrepreneurs. So both my mom and dad built their own business. So that has impacted me in life, that I have actually had a very, active parents that have raised me in an environment of being financially independent and also savvy in life. And that's also probably impacting how I'm approaching financial and investment. And I'll definitely come back to that. So I started my career in McKinsey. I have been a consultant, and then I have more than 17 years in the financial sector. So I'm definitely also highly impacted by a lot of financial education through my career. But it doesn't make me either a perfect investor in any shape or form. I have worked in a more traditional bank before, and now I have joined Saxo 3 years ago, where we are truly into offering digital investment for our many clients. And I have a personal ambition of getting much more female investors on board. So we helping closing the financial gap, and definitely also the investment gap that we see across all our offices that we are present in.
Next is Charlotte.
Yes, I believe that's me. Well, thank you very much for inviting me to take part. I am Charlotte Mansson. I head up Sustainable and Transition Solutions at BlackRock for the Nordics and the Netherlands. And I'm really happy to be here with Saxo today. It's a very important partner of ours, and I think we share a lot of the same values as an organization as well. A little bit about myself. I'm Danish and I live in Copenhagen. However, I've lived abroad and moved around quite a lot. I grew up with parents that were diplomats, so I've moved abroad from when I was 12. And but I'm back in Denmark now. I've got 3 kids, 2 daughters and a son, and I'm married to a Swede. I love traveling, and I think the entire family has been bitten by the travel bug. So we're always thinking of, where to go and explore the world, and how can we learn from other cultures as well. In my role, I head up, as I said, Sustainable and Transition Solutions. And just a little bit briefly about my road to, let's say, sustainable investing. I started my career also in consulting, management consulting, and then after about 6-7 years, we moved to Switzerland, and I thought, I wanted to do something else. And there was a notice in the newspaper for someone wanting to start a firm focusing on environmental, social, and governance impact. And I didn't even know what that was at the time. But I was then part of building a firm, which is today quite a large ESG data provider. But that period of being in a startup has really shaped a lot of what of how I approach work and how I approach projects today. It was a very instrumental period in my career, you could say. Today, I'm at BlackRock. I've been here for a few years, and I've worked with sustainable investing for about 17 years, both on the ESG data side, but also on the investor side. So that's that also influences very much my approach to my own personal investing.
Okay, I guess it's my turn then. Hi, everyone. I'm Charu. I am really honored to be here, probably a little bit less experienced than everyone else on this webinar today, which makes me even more excited about this whole thing, because I'm sure I'm going to have a lot to learn from here as well. So I am currently the head of FX strategy at Saxo, and I'm based out of their Singapore office. So what I really do is, so Althea and I work in the same team, and kind of a similar profile. So she specializes in the fixed income space, and I'm trying to specialize in the FX space. It's a role that I've taken up recently. So basically helping our clients to find opportunities in the markets, particularly in the FX market, when it goes for me. So I joined Saxo about 2 years ago as a market strategist, and before that I was an economist with a UK-based firm. I was still in Singapore, but I was covering the Southeast Asia and India regions for them. So I think that's really been the key part of my career. It's being an economist and being in the finance industry for about 12, 13 years now. And I do come from India. I also have two kids, 7 and 3. So work-life balance is still quite a challenge, I would say, but I would not have it any other way. So as a background, my dad actually was a banker. So I've always been exposed to the financial industry, to the markets, to the investments, investing journeys. But some would see that as a huge positive. It's a big advantage. But in reality, what happened was that it made me leave all my financial decisions to him. And I never managed my own money as a teenager or as a young adult, in fact. So there's been a learning curve for me. In fact, I only started investing when I was well into my career, I think about 5 years into my first job. So it's been a learning curve. It's been a steep learning curve. And as I said, it's really an honor. And I'm very excited to be here. Whatever I can share, I hope I can inspire some of you by sharing my own the challenges that I've faced in the early days and how things have progressed from there. But more than that, I am looking forward to learn a lot myself.
All right. Now that we've met each other and know everything about everyone, maybe we start with, I'll start with you, Charu. If you could just tell us why you started investing.
Right. So I think, okay, that's a good, continuation of what I just said. Like I was saying, I come from India. And anyone who's ever asked this question, why did you start investing? Of course, it's reasons, to earn money, to finance my expenses, to have financial freedom. Of course, all that has been there. All those reasons are applicable to me as well. But I would say I'm privileged. I was born in a family where I did not have to worry about expenses. I did not have to worry about my needs. I in fact did not even had to worry about what I want to spend on. So all that was pretty well taken care of. But my real urge to start investing really came up in the growing up years. Although, like I said, I left that decision to my parents at that time. But when I was growing up, I've seen a lot of my cousin sisters around me who got married. I saw their lives evolve. So they had to put up with jobs or with families, their relationships, where they were unsafe. Many women put up with circumstances because they did not have the financial resources to leave. So for me, the motivation really came from more than the fact that I needed the money. It came from the fact that I needed a power of choice. I want to be able to decide whether I want to have a career or not. I want to have kids or not. I want to have a husband or not, based on the fact whether or not, So, I mean, I think I just wanted that these basic decisions not be influenced by the need for some amount of financing that is needed for my expenses. So I think it was really the power of choice that investing gave me that drove me to this.
Okay. Next, maybe I'll ask you that question, Camilla. What is it that investing represents for you, and why is it important if you think that it is important?
Well, investment is indeed important for me, and I hope, and I also feel that for many more around us, and hopefully more over time also. But for me, investment is very much a key component of being self-financed. So for me, it represents very much the independence and the opportunity to choose and be charged and take charge of your own life. So for me, it's actually a key fundamental part of my approach to life is that I want to take charge and feel that I can actually make an impact with what I do. And through my investments, I can first of all take charge. I can make decisions, I can also feel I make an impact for myself because I know why I'm invested and what I want to invest in. I define some very clear goals when I invest, and then I can also follow the impact. And over time, I also, with the whole sustainability agenda and the possibility also to invest more in that, I also see that that is important for me, that I also can invest in that. So that's also a part of why and what investment represent for me. And then I would say a very practical thing that it also means to me by being invested is that I get much more into the things I'm invested in. Because when you really have worked hard for your money, for me, it's also represent that I want to know what they do for me, the money, how I'm invested, what is the impact. So the whole understanding of what is going on in the geopolitical situation or tensions that we are in right now, what industries are actually booming and what is not. The new trends of AI, sustainability is not that new anymore, but all of these factors coming to life is for me also a way that when I'm invested and I put my money at stake, I really want to know what's going on. And maybe I don't know it all, definitely not, but at least I am motivated to get more into it. So definitely it represents for me investment that I can be independent. So financial independence is represent for me is very much represent that I can take charge, that I'm in control, and then the third part being that I'm being educated, and I feel that I'm enlightened by being invested.
All right. We all consider ourselves investors here, but the question is, are we true investors? And I'll ask this question to Althea. Do you have more money saved up or invested? And if you have more money saved up, why?
So, interesting question, but I think that the answer can vary depending on which part of your life you are in. Right now, I'm more invested than having a saving around for two simple reasons. I don't have, the first one is that I don't have an imminent need for cash. And the second one is that there is opportunities in the market that allow you to be invested without taking major risks. And basically, and that means being invested in cash. Whenever you want, you can sell that product, take the proceeds and spend them as you want. And this has been a theme that has been going on in fixed income market for a couple of years now, but it started to take place more in June last year. What's happening here is that interest rates globally are at a peak compared to the past 20 to 25 years. And that means that the very short-term investments opportunities can provide a yield, a return that we haven't been accustomed to. And these kind of instruments, such as, for example, money market funds, short-term sovereigns, they are very liquid. They can be sold. And if you don't touch them, they can basically provide you with one of the highest return we have ever seen. Since 2000 until now. Ida, I have a slide actually that I put together, and it's a table where it shows US, UK, and German sovereigns. And in that table, what I'm trying to convey is just that investors looking for very safe instruments today, if they invest this cash, the chances to lose money is minimal. And the return they would have by keeping those instruments, it's quite sizable. We are talking from 3% a year up. So definitely, I think that right now there is not excuse not to be invested.
think you're on mute, Ida.
Oh, goodness gracious, it always happens. So the next question is for you, actually, Charlotte, and it is investing something that you prioritize, or is it something that is often pushed aside when you have more important things to do or other priorities?
Yeah, I mean, I think a little bit what Althea said about, it depends where you are in your life. I think that has also applied to me prioritizing or not investing. I think, when I was younger and my kids were younger, I think, I had different financial goals. It was about, buying a house or securing funds for private education, right? So it was more about I needed my savings to be very liquid so I could quickly translate them into these particular more short-term goals and so forth. And I think also in the past, I kind of just expected my pension savings to evolve nicely over time, or my general savings to just sort of like tick along in the background. And I think now, I'm older, my kids are older, I've achieved some of those more short-term goals. I bought my house, my kids are finishing school. And so now I'm looking towards that next financial goal, which is all about how do I secure a nice and comfortable retirement, right? So I'm not close to retiring, but I'm just saying, you need to think like long-term now, right? Okay, so I think it has definitely become more of a priority now, where I'm thinking, okay, how do I plan for this? And what would I like my retirement to look like, actually? When do I want to retire? When am I able to retire? So it has become much more of a priority for me now, where I'm, regularly speaking with a financial advisor, where I'm regularly looking through my portfolio and my savings to see, can I optimize maybe tax efficiencies, or can I allocate some of my money into different funds and different strategies and so forth. So I think it has changed over time as my age has changed and as my financial goals have changed as well.
Okay, sorry, we just got some comments that the sound is bad for Charlotte. I don't know what it is, if you can do something about it, but apologies for that. The next question is actually for all of you. And we often hear that women are risk averse, which means that they do not want to take risks. Now, the question to all of you is, do you consider yourself risk averse, or is it more that you are risk aware and you want to understand what you're doing before you make an investment decision? So maybe we start with Althea again, alphabetical order. Althea, Camilla, Charlotte, and then Charu.
So yes, I am risk averse and risk aware because I don't want to lose money. So simple as that. And I think it's not a bad thing to be risk averse or to be aware of risk, because it means that what you are going to do is to take all those precautions in order not to lose money. So you're going to diversify. You are going to educate yourself on how to hedge against some financial risks. So I think definitely, I think that it's worse to be an investor that is too prone to risk and invest on emotions or what is trendy at the moment and have all those eggs in one basket, rather than being risk averse. And also, just I am in fixed income. Fixed income is the asset class that is the most conservative. So that makes me risk averse, and I look at stocks with a little bit of a suspicious.
It's a super interesting question, and I also think your reflection is also showing, Althea, that it's also very much how you see it, right? Because for me, it's I'm definitely risk aware. I don't think it's possible to be risk, averse, because you will always, when making decision, when making a choice, you will always have a risk included. So it will be, not possible to think that you can avoid the risk, but it doesn't mean that I'm risk aware, doesn't mean that I'm a high risk taker. I'm definitely low risk. It depends a little bit of my different investment, but I'm definitely low risk. But I go into the approach that I cannot avoid a risk. So even though I will lean towards a lot of other decisions of how they will invest, I also take a risk, because you always have to include a risk perspective into your investments, matter whether it's a low or it's a high risk that you're actually taking. So for me, my approach is always I will be risk aware and look into the risk, and I spend a lot of time looking at that. So I'm definitely not taking high risk in my investments, but I don't think it's possible to be trying to avoid a risk, because that would be then you have to take a decision, you have to take a stand either by yourself, or you look into experts or make them do it for you. It's a choice no matter what, and a choice include a risk somehow. So that's also why the education and understanding of that, I think, is super important for all of us that are doing investment, being new to investment or very experienced.
Yeah, I don't know if my mic is any better now. I wasn't quite. I tried to look at the settings, but can you hear me any better now? Or
Yeah, it's
is it okay?
way better. Yes.
Yes. Oh, okay. Yeah, I'm not sure what that was, but sorry about that. I think I am a little bit risk averse. I don't think I was like that before. Actually, I think when I first started out, I was much more, let's say, I wasn't as worried about losing money. But then I did lose some money, actually a sizable chunk in a bad investment. And I think that really scared us off, actually, my husband and I. We thought, oh no, this is, it's like 20 years ago, but it was like, oh, that's not good. Like you could actually, we had worked so hard, as part of a pension fund that had some problems and whatever. And I think that really made a mark on our risk profile, let's say, or our risk appetite profile. So I think now I'm definitely more risk averse, but on the other hand, I also, have to embrace risk to some extent, because that is also where you can really make some significant gains. So I'm risk aware, I think, like the rest of you said as well, but I'm probably a little bit more of a careful sort of investor.
Okay, so for me, I think all women are a little bit risk averse, low risk, however we might put it, risk aware, with low risk tolerance, or risk averse. I think that goes for most women out there, and I probably fit in the same bracket as well. I don't want to lose my capital. That is my utmost priority. And there's a very famous trader. I don't know if you've heard of him, Paul Tudor Jones. He wrote in his book that the secret to making money is really by playing defense. So you must protect your capital, and you should resist the urge to make extremely wild bets that have a very low probability of success. So I do play defense. Whenever I get into a trade, I assume that it will be a loss. So I always do risk management, whether it is stop loss, diversification. Of course, there are many tools to do that. Okay, so I do obviously make some wild bets and speculative trades as well, but the amount that I use there is very, very small, something that I don't mind seeing go to zero, really. So that's the mindset I go with in a speculative trade. And of course, I do a lot of research as well. But I mean, I think really the secret to winning any game, whether it's sports or it's in investing, really, you have to, I think, execute defense in a very strong manner. That is the first step.
Okay. Different opinions out there, definitely. The next question is to Althea, and it has to do with financial education. How important was financial education for you when you first started investing, and now?
Well, it has been crucial. I come from a family of state employees. I never heard about financial markets until I started to go to university. My parents always looked at investments with a suspicious eye, and I never been exposed to that word. But then when I was at university and I was studying economics, I understood that that was the heart of the economy, and I wanted to know more. So now I'm specializing in fixed income, but I haven't been raised with that knowledge. Actually, I remember my first job within fixed income. It was in Mitsubishi, and I was a sales rep for institutional clients. I was given a phone, and my boss said, well, start to make deals, start to make money, basically. And I was like, okay, so what I'm gonna speak about with my clients, they are sophisticated clients that they look at markets every day and they don't know anything. So what I did is just, I had just to catch up. And the way to catch up for me has been reading and using the Google extensively, asking questions, not only to my colleagues, but also to friends. Oh, did you hear that and that? And it was a very steep learning curve. But if you keep at it, sooner or later, you are going to break the code. So I think that my biggest suggestion here is just start. Don't be discouraged. And if you don't understand something, don't be afraid to ask questions.
Okay. The next question is for Camilla. Do you talk about investing with your friends, female friends, and your children? And if you have, you only have daughters, so I guess, yeah. Do you talk to your kids about investing?
Well, I will actually start reflecting on your point, Althea, about, ask question and lean in and being curious. And I will say, I probably years back belonged to the 80% of women that don't like talking about money. So even though I have, as I said, been born in a family where being an entrepreneur, there was a talk about money and how you earned money and development, and I have been in the financial sector for many years. Well, I actually have not talked enough about my own investment. And I would say one thing is to talk about my own. Most importantly is that I went into a dialogue and actually was seeking all the great inspiration that you actually get by opening up and about your own investment or economy in general. You also get a lot of inspiration. So I have definitely not been good at doing that. And now being heading up the Saxo experience, a lot of my friends and family, they do have a lot of questions, and they now expect me to be experts and being able to share, all the good investments advice, right? That's a privilege that come when being in my position. So that have also learned me, to share also my own experience and what I do, because I think that's a good way to also get some good inspiration, exactly as we're doing here today, is that is where you actually get more smart and clever, and you also realize that others also make bad decisions, or should have invested more, or should not have pulled back when things was going in another direction. So I think that also learns you to reflect upon that we all make mistakes around our investment journey. And then to the comment side on my daughters, well, that have also taught me that they are now being, I will say, educated a bit by me. At least they are very curious into investment. So they both, even the one at 12-year-old, is actually reading books around how to invest on a low level, but it's a good start. But more importantly, they all have actually a decent stock portfolio. And that means that they are curious into it because they are invested in some companies that they can relate to, that they know somehow, and that they feel connected to. So they're very curious into seeing the statements that comes on a quarterly level, where they can actually see how the portfolio has developed. It's still a small portfolio, but it gives the dynamic. So definitely my own learning have been, I could have been a much better investor. I would have been much wiser. I would also stayed more calm in specific situation if I have actually equities yet. So definitely, I spend a lot of time discussing investment, especially with my kids now. And I also have a father-in-law who's a great investor, where I also share a lot of my own experiences.
All right. Now we have a more practical question. What is it that you actually are invested in? Maybe Charu, you could take that one.
So I
Yeah,
would say.
I think very. Oh, sorry. I thought you said Charlotte. Sorry, go on. Sorry.
That was for me, is
You
it?
can both answer it, because then maybe Charu goes first and then Charlotte is second.
Right. Okay. That's great. Okay, so for me, I mean, my investing strategy is basically around something like a core satellite approach that I follow. So the core portfolio means, which is something with a broadly fixed asset allocation. It is for the long term. It is the objective is really wealth accumulation and also to have a steady source of passive income. So that gives me the flexibility to take a decision about how I want my career to go from here, because I do have a passive source of income. So certainly this is a portfolio that's tilted more towards equities, because as most of you would know, equities potentially provide better long-term gains. So I think within the equity space, if you want me to go in a little bit more detail, it's mostly blue chip stocks. And then I try to kind of tilt the portfolio sometimes looking at some of the long-term themes as well. I have a portion in REITs, like I said, because I'm very focused on having a steady source of passive income as well. So the dividends from REITs kind of guarantee that as well. And Singapore obviously has quite a few interesting REITs to get exposure to. So I think that's a key part of my portfolio as well. And thanks to Althea and her great insights all through, I've also added some bonds over the last year or so. So I mean, to be honest, I never invested in bonds earlier until last year, as I said, when there was so much being said about locking in the yield, and there was so much discussion in our team. So of course, I'm privileged in that sense that I'm constantly in touch with markets and I constantly hear views from the other experts in my team as well. So that really helps me in deciding where I want to put that. And the satellite one that I was talking about, that's more where I kind of try to make some quick bucks, and that's where my own FX research comes in quite handy. So I do a lot of FX trades in there, short duration, maybe 1 day to maybe 1 month. I do a lot of news related stuff there. Like if there's an earnings coming out of a pretty big stock, maybe, and I think it's going to go well, then I kind of add that for some time. But I use a lot of option strategies, so I sell calls and puts to kind of again increase the yield of my portfolio. So this is something which is something I play around with. I also add something like crypto at times, so speculative, but that's, like I said earlier, it's a very small part. It's about 2% of my entire portfolio size. So I don't mind seeing that going to zero if at all that was to happen. So I think, and because I kind of focus that the core portfolio is more for my kids and for long term, I don't take any speculative bets there.
Okay, Charlotte, what are you investing in?
Well, I think first I just wanted to say also that Camilla, I think you have inspired me. I need to go home and get my kids more involved in investing, because right now all they think about is, when can they buy their next pair of jeans, or when can they go out with their friends. So I see, we'll have some changes at home. So thank you for those tips. So what am I invested in? Well, I have a number of different savings accounts and pension funds that are invested in long term, a mix of fixed income and also equity as well. But what I'm really interested in are some of those mega trends. So, I work with sustainable investing, and I'm really excited to lean into some of those, whether it be around healthcare, whether it be around digital transformation or climate transition. So I'm invested in some of those different thematic funds. These are listed equity funds. And so, but I really believe that there will be some financial gains over that long term, right? It'll be generating alpha over those 10, 15 years, because these are trends that are really changing the dynamics of economic markets and systems and so forth. So that's what I'm quite excited about, and that's also, it's really led me to study and to educate myself around, okay, well, where are some of those trends taking us? What does it mean that the world's population is aging? Well, it probably means that there will be some opportunities within healthcare services or AI that can be used for remote diagnostics, or what does climate transition mean for us in terms of investing, not only in windmills, right? But there's so much else going on, so many other innovative solutions, or we're looking to change the food system. Well, maybe more precision agriculture could be really interesting. So I think, it's quite exciting to lean into some of those themes.
Okay, maybe we'll stay with you, Charlotte. And the question is, do you think it is important to have a plan or a goal when starting to invest? And did you have a plan and a goal when you started?
Yeah, I think it is actually really important to have something, right? Would it be, so I think, my first goal was, together with my husband, we wanted to buy a house, right? So it was like, okay, well, the goal was to generate enough so that we could put a down payment down for a house. And so that was really that goal. And then, we had another goal, which was around, well, we wanted to secure fees for schools, for the children and so on. So I think it has helped to make us more focused, I could say, right? That, okay, there's an outcome, which is like a life goal, something that's really important for us. And so we need to be a little bit smart about how we maybe sacrifice some of those short-term, let's say, needs or wishes. Maybe we don't need to go on as many holidays, or maybe we don't need to have, expensive dinners every week, or, because we have that long-term goal that we are really keen to achieve. So I think having a goal is really important. And the way that we do it now is really about, well, set aside money every month, both for, of course, pension schemes, but really trying to optimize the tax efficiencies around that, and having a sort of a diverse portfolio exposure through those. But I'm in the process now of reviewing my mortgage, because actually maybe I want to sell my house sooner than in 20 years, which means that maybe it's not the right mortgage, right? So then it becomes a different kind of, well, maybe I want to buy an apartment instead, or maybe I want to move abroad. So it's about revising those financial goals as well, because that will have an impact on, well, maybe I don't need to set aside the same amount of money, or maybe I do need to increase the amount that I actually set aside. And then also, going back to what I said earlier about being a little bit risk averse, I always like to have a savings account with a buffer, right? Something that's very liquid, something that, let's say, I don't know, my car breaks down tomorrow, I need to buy a new car, then I can very quickly just do that. So I think it's about having that balance, the buffer for eventualities, for sort of ad hoc things that I hadn't thought about, and then to have those goals and really plan around those goals as well.
The next question is for all of you, and we'll have the same alphabetical order. And the question is, has investing actually been good to you? Have you made money over the years? And I'm talking about the entire period, not in the short term, but have you made money over the years? Starting with Althea, Camilla, Charlotte, and then Charu.
So overall, investing has been good for me, but I have to admit that there has been moments where I made money and moments where I lost money, moments where I needed to access those funds and the market crashed, or those particular instruments would provided a loss mark to market and I couldn't touch them. And that helped me to understand better how I wanted to invest in market and how I wanted my investments to be flexible. The thing is that there are things in life and in markets that are unforeseeable. In life, it could be the loss of a job, it could be death, it could be pregnancy, for example, or for example, in markets, we had a pandemic. Nobody would have bet that there would have been a pandemic in 2020. We had the global financial crisis. And the thing is that in these moments, it's very likely that your portfolio is going to behave in ways that you didn't expect. What helped me going through losses is that, first of all, I didn't do nothing. And I think that's very important. When there is a loss in your portfolio, the best thing you can do is to do nothing, not to panic, because it's important to evaluate the reasons why you are suffering those losses, and you have a plan of what you want to do with that. Sometimes it's better to take a loss and move on and invest in other better opportunity, but sometimes it's a matter of timing. So with my experience, at least so far, that has not been too long, my advice is just to understand, to keep your portfolio flexible, very liquid, so that you can move investments and money easily, and that you can make decisions quickly. And that could help you also to make better choices in the future.
It's good reflections, Althea, and I would say from my overall perspective, how I see, and evaluate whether I make money. I've first of all, of course, the full time horizon, which is also what you're alluding to, Ida. So I have invested for 20 something year, not a big portion of money in the beginning, and then I have dialed up over time. But I also approach my investments as seeing it very much buckets of money, where I have different risk profiles into it, and also invest different amount of money, and also on different frequency of investment. So some of these buckets of money I have actually, and that has been a really small amount, where I have been more playful, I will say, and have experienced or have made probably more risky choices, and that has actually been okay over time also when you look at it from a longer time horizon. But definitely that bucket of money have also been a time where I have experienced losses. And then I will say in general, because I have stayed in, I'm what we internally in Saxo call a buy and hold investor. So I'm more into having my investment for longer time. I have managed to actually improve my portfolio and definitely made money on it. I have had period where I've invested in things where it has not performed at all as expected, and I have to admit that was also the period of time where I just decided I will not look into it. I will look into it on a yearly basis. I will not follow it. I know it's not going as expected. And then over time, it's actually coming up. And that's one of my buckets that's right now are performing really good. So, but that's also after, 15 years within one investment. So it goes up and down. And I think exactly to your point, Althea, it's around staying also liquid and being able to be flexible if things are moving that are impacting you both in your personal life and also external events. And then being diversified, right? Not put all your money into one bucket, but definitely also think about how you can spread your risk.
Yeah, so I think, on a net basis, it has worked out well in the sense that, yes, I have made money, but there have been, just like both Camilla and Althea said, there have been periods when I didn't, or when I in fact lost money. I mentioned already very early on in my investment, let's say, career, I actually lost some money, right, which really impacted my risk appetite. So I think it's about having that, looking what is your horizon for that goal that you are hoping to achieve as well, right? If it's, let's say, your pension plan, well then, okay, it's not such a big deal if it tanks tomorrow, because fortunately I still have many years until I can retire, right? So, I'm assuming that the markets will turn again and so forth. And then there are these eventualities. We lived in London when Brexit happened, and we had a British pension fund where their exposure to British stocks, completely tanked right after Brexit, right? So, and that's now slowly making its way up again. So there will just always be those unexpected fluctuations as well. So I think, sometimes you need to have ice in your stomach and just say, well, let's just wait it out and see how it develops, unless you have really invested in something that you think is going to become a stranded asset, right? Where actually there is no hope for this type of service or sector and so forth, in which case you might want to just cut your losses and get out as soon as possible.
So I think like everyone else here, I've also had periods of gains and losses. But I think for me, the real metric is whether, despite those fluctuations, am I on track to achieve my long-term goals or not? So that is something I track quite closely. The funds that I need for my, a kid's education, or maybe to buy a bigger house at some point of time. So I think those are doing pretty well, because those are in very conservative assets and with a long-term time horizon. So compounding is playing a part there. So I think that's something that I'm quite comfortable with. But does that mean that I don't lose money? Certainly I do. But I think something important that I've learned through this journey is that, especially through those periods of losses, is that how should I refine my investment strategy? And I think as Charlotte mentioned, cutting your losses is something that I've learned the hard way. When something's going down, you feel like, oh no, because you sometimes have a very strong conviction, you think it'll go back up, it's going to go in your favor at some point, then just losses keep getting bigger and bigger. So I think that's been a hard thing for me to learn. I've learned to cut my losses, and of course risk management, that's something that I can't emphasize enough. Something else that I also learned recently, I think I've been using stops in my positions for quite some time, but I've used trailing stops pretty recently as well. So that's a strategy that I learned in recent months, where I can lock in some profits as well, so as to make sure that my position, which I'm waiting to get out of, does not go back in losses. So if the moment I see some profits coming through, some profits that I'm comfortable with, and when I start to lose conviction on those positions, I use those stops or trailing stops to kind of really lock in those gains as well. And I think it's really a journey, and those learnings and lessons still continue.
All right, I think we are going to move to the Q&A. We have a few questions from the audience. So they haven't mentioned a specific name, so I will just ask someone in particular randomly to answer the question. So there's someone, Lina, is writing here: as a young person with bigger goals for buying a house, start a family, looking back, how would you have prioritized your finances and investments at the same time? So maybe Charlotte.
Yeah, I think that if I could go back in time, if I could have a time machine and make myself much younger, I think I would have done two things. One is that I would have really educated myself much sooner. I would have taken, let's say, control over my savings plans much sooner than I did. And then I think also that I would maybe try to be a little bit more adventurous, right? So, educate yourself on what are the options, and maybe try out different types of investment products, and start small. Don't put all of your savings, don't put all of your paycheck in there, and there is something to be said for pension funds as well. So again, this is me being risk averse, right? There's something to be said for setting aside into a nice, evolving kind of pension plan that just takes along in the background as well, because there are taxation benefits with that also.
Okay, we have another question here from Sarah, and the question is: for those of you who are married, do you talk to your husband about your investments? Do you make your investments together, or you have separate investing finances? Camilla.
Yes, I indeed talk with my husband about investments, and we also, I will say, we don't take the decisions together, but we definitely discuss, and if it's a bigger thing that impacts our life, and it's the part of the buckets of money that is a shared investment, then we definitely take the decision together. So yeah, I actually do spend a lot of time. I think it's super interesting to discuss investments and with my husband, in order to say, and it's coming back to, I think you have a strong point, Charlotte, in knowing your goals, right? And if you align around what is your goals of investment, if you do that together with your husband, which I do, then it's natural for me that I align that. And then on the side have smaller buckets of money that I do definitely invest on my own, where that's also super interesting. But I spend a lot of time discussing it with my husband.
Okay, there's a question here from someone called A. For an inexperienced beginner, which instrument would you advise to start with? And that I'll ask Charu.
Yeah, that's something we get very commonly as well. When we do sessions like this, I think since we're not allowed to obviously, take any instrument names here, particularly, I think the best way really is to start with a very broad index, but at the same time, of course, educate yourself as much as possible. When it comes to, again, starting with the broad index, you can take the example of MSCI World, MSCI US. A lot of people have home buyers, so and a broad index from your country as well. I think these are some of the starting points that people have. But I think really, if you have a broad index exposure, the key thing really there is compounding. And this is a slide. I'll just share it, Ida, if you don't mind. Yeah. So I think I guess you can see that now. Okay,
yes,
so I just wanted to emphasize the point that if you're starting early, time works in your favor more than anything else, more than what you put your money in, really. As you can see here in this table, there's a woman who starts early at 25 and only invests for 10 years versus investor 2 who starts at 35, so 10 years later, and invests for 30 years, so a much longer period. But eventually, at the age of 65, the wealth of the person who started earlier is significantly more than the person who starts later. So I think, if you don't have time, a lot of women especially would talk about not having enough time to kind of continue to think about what to invest in. Just regular investments in a broad index ETF, I think that serves your purpose pretty well as well.
Okay, we have one question here. If you could give a piece of advice to someone starting with investing, what would it be? I think actually maybe all of you could answer the question, maybe like 1 minute max. If you have one piece of advice to give to someone, what would that be? Starting with Althea. You're muted, Althea.
I apologize. So first of all, set clear objectives, be very clear on what you want to achieve, research and educate yourself about those investments that you are about to embark on. Stay informed, and the biggest advice is just start. Exactly as Charu just said, the early you start, the better it is.
I definitely start with do it. As exactly to your graph, Charu, is showing, get into it. It's never too late to start it, even though it's better, of course, to start younger. It's never too late, and there's never a bad time to start investing, at least not if you have a longer time perspective. So for me, it's very much, urge yourself into do it. And I think that's a big barrier, I think, for a lot of us is that we then will wait for the next summer vacation where we have time to think about it, or we have a lot of excuses for not start doing it. Start with small amount and then go into it, and then I'm sure that you will all be hooked over time. And then, of course, when you do it, pick some investments that interest you. That has been super important for me, because that's why I stay curious, is because it's interesting for me, as long as I still stay diversified. So spread the risk.
And I think maybe just taking one step back before you do it, I think you need to actually make a budget to really understand how much can you afford to invest as well. And I think, Charu talked about playing defense, right? So when you make these investments, your assumption should probably be, okay, I might lose it all actually, or at least I won't gain anything. And so make sure you've done a real budget. Like, what are your actual expenses every month, and how much are you actually getting in every month? How much could you afford to lose if it was to, not go well and so forth? So yeah, I would start with that. You're really seeing, what are you comfortable to set aside every month? Is it, I don't know, 1,000 kroner, 2,000 kroner, or is it more? And then really start to invest it. But be realistic. Don't be because, well, depending on what your risk appetite is, you should really just first have a look at and see, well, what can I actually afford to invest?
Before you answer the question, I just want to share my screen with the audience. There's a QR code for the survey. If you could please just answer those few questions while Charu answers the last question. Thank you.
This is the hard one to go last on, because I think most of the good stuff has been covered. Get educated, understand your trading style, your risk tolerance, compounding. But I think one thing that I may add, and I'm sure Camilla, you would like this, I think watch your costs. I would say, costs and fees can really eat up your returns over time. So, it's better to, I would say, choose a low cost investment option, such as index funds or ETFs that offer you a broad market exposure and are, low cost compared to actively managed funds. So when you hear about actively managed funds, 2% fees doesn't sound like a lot, but if you're investing $100,000, then you lose $2,000 in just that active management. Whereas if you just put it in an index fund, it's probably 0.05% or less than that, so you lose about $50. There's a huge difference these costs can make in your overall returns over time.
Ida, you are muted.
You're muted.
Sorry. Thanks, everyone. I think we've come to the end of the hour. Thank you to all the speakers for your insight and sharing your stories and experiences. Thank you to the attendees for joining us today. I'll just put the QR code back. I just wanted also to make a small announcement. We're starting a women's investors community at Saxo. And on the next slide, you'll have the link to the LinkedIn and the Facebook account. Please join us if you'd like to learn more about investing. If you're serious about it, tell your friends, tell your girlfriends, your moms, your sisters, and then let's all talk, discuss ideas, and learn from each other.
Perfect time for
Thanks a lot
Ida
for
to
your time,
freeze.
and see you next time.
Thank you so much.
Thank you, everyone.
Thank you all.
Thank you all.
Good day. Bye.
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 Bye-bye.